Alright, welcome back guys to MMGinvest. Let's talk about the stock market, the economy, and metals. So I'm going to cover the news first, and then I'm going to cover the price. And I'll cover the yield curve, and I'll give you guys my opinions and thoughts. Now, first of all, this is not financial advice. Consult your financial advisor. I am not your financial advisor. I could be wrong. And equities, stocks, everything is extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. All right, so here's the market watch I have here. As you can see, the volatility index is at all-time lows. Gold is still up at 1,330. Treasury yields at 2.6. The dollar is at the 96.6 handle, and Dow's hovering around 26,000, and S&P is around 27, almost 2,800. So let's cover the news. There's a lot that's been going on the past week. Obviously, AOC's green deal, which would I don't know. I don't know what to say about that. It would just bankrupt everything, but bankrupt the nation instantly. Like, who's gonna pay for that? Janet Yellen, the former Fed chairman of the Fed, she admits live that the Fed may be cutting rates soon. So, if you remember, all last year, they said they're going to normalize rates until the balance sheet of the Fed, all the debt they've accumulated through money printing, runs off of their balance sheet, and then they can normalize rates, and then the Fed becomes solvent again, because pretty much the Fed is insolvent right now, meaning the Federal Reserve Bank is, like, bankrupt. But she admitted that they're going to cut, they might end up cutting rates, and they will, because there's a recession that's very overdue. Now, yeah, Trump's State of Union address, that definitely helped the markets go a little higher than need be. So the IMF, International Monetary Fund, warns of global economic storm coming. So they always do warn you. It's just that nobody pays attention because there's always something else going on in the news. And I don't know, during the end of bull markets and economic expansions, people like to ignore the warnings until something starts happening. And a lot of people like to ignore me as well. And, you know, then they learn the hard way. So gold. I will talk about gold in a little bit. Bernie's going to run again, and I've been saying this for 2 years, since Trump's election. And not just that, Bernie, I think, would have had a great chance of actually winning in 2016 if it wasn't for the rigging of the DNC and Hillary, right? So they stole that from him. But he's going to run again. And he's probably the most likely out of the left to win. And if the stock market falls until 2020 elections, I think Bernie has probably the highest chance of winning. And that should be the end of the United States. I'm sorry to say. I'm not here to tell you guys what you want to hear. I'm here to tell you what you need to hear, all right? And I am positive. I'm trying to, you know, create our own country. I'm probably not going to be successful. I'm going to need a lot of people to help me. Unfortunately, most people, you know, they only do things when they have to, not prior to they need to, so they can save themselves. So, I mean, with the new Green Deal, with AOC and Bernie, I mean, you could already see that Americans are leaning to the left, the majority. And a good sign of that was also when Texas almost fell during the, the last elections. It was I forgot what it's called. But Texas almost went blue. And it will next time around. So that's that. The Fed minutes was released 2 days ago. And they pretty much capitulated. I mean, they have fully capitulated. They're calling off all of the rate hikes, and it's just money printing to high heaven because they can't. Because if they say that they're going to raise interest rates later on, then the stock market tanks, and so does the economy. If they just say, "All right, we're gonna just keep printing," then the stock market may go higher until it doesn't and the money runs out and it crashes pretty much. Gold hit 10-month peak, and it did. It's been pulling back for the past few days, which is good. I'll talk about that. Fed set to continue pause. Yeah, I mean, the Fed is too scared to say that they're going to raise rates again because they know the market will fall. If they say that, it doesn't matter. The market's going to fall anyways, because interest rates, the nominal rates, is still set by the bond vigilantes on the bond market. So they're going to force the market to fall either way. This is just buying a little more time. And yeah, I mean, the writing's on the wall, guys. Listen, the United States is already socialist. It's been socialist for decades. It's just, you know, America doesn't want to admit it. Having a central bank and the largest government in the world and all the welfare and warfare and all this, I mean, in the corporatocracy, right? The corporations getting tax money. I mean, it's all socialism. It's just nobody wants to admit it. I mean, think about it. What is controlled by the government? I mean, the schooling, everything is already controlled. Healthcare, Obamacare, it's already being subsidized by money printing and not tax collections. Tax collections can't even pay for half of what is going on right now. It's just money printing and the future. So we're going to have to pay it back one way or another. Everyone's like, it's okay, we'll default. It's not that simple. If we default, other countries can still come in and liquidate our assets, take our cars from us, take our businesses, take what's left of the country and pretty much repossess it like the repo man. So that's what happens when countries print money. Yeah, I mean, Venezuela, Zimbabwe, Weimar Germany, Hungary, it's been tried and tried again. And I'll talk about the new economic theory, what they're coming out with. The housing market is in free fall. Yes, it is, just like it is in Canada, Australia, and everywhere else all around the world. You guys should come in the alerts room and watch this video. It was very good. Mike Maloney, I mean, he's good. Millennials are all late on their car payments, like 3 months late, and the car bubble's gonna pop. And you know, that doesn't surprise me. I mean, millennials, they've been they go to college, they're not taught anything besides being oppressed and offended and all the Marxist crap. And of course, they take on more debt that they could, handle, and they drive around new cars that they can't pay for. It's nothing new. I posted some charts. You should look at them. They're in the newsrooms and the chat rooms. Here we go. Modern monetary theory or monopoly money. You should read that article. Listen, this is what the modern monetary theory is. Basically, it says, well, the U.S., because it has the world reserve currency standard right now, right? Basically, they should just keep printing money until there's prosperity, which is equivalent of you lost your job, so you're going to take on as much credit card debt and live off of credit cards until you buy enough things until you don't need a job or something like that. I swear to God, that's what it is in layman's terms. So the U.S., it lost its job by high taxes, high regulations, and it didn't become competitive on the global stage, and then it was gutted by China, right? So that's how the U.S. lost its productivity and all its manufacturing and real jobs. And now you just have a bunch of people doing service sector jobs like waitresses and bartenders are shuffling paperwork around in cubicles and selling and just doing things on the internet. And no one's actually making anything. So that's how the U.S. lost its job. And the credit card is the Fed. And they're just going to keep... And it's trapped now. There's nothing else... Listen, there's nothing the U.S. could do. It has to do this. It has to go on this crash course and fall off of a hill. And the best thing that could happen is that the pain is so bad. And let's say they're not social, like Bernie, they're communists, all right? So they win 2020, and until 2024, the crash is so brutal. It's like Mad Max. And everyone's like starving, and everyone's losing, and everything just falls apart, and all control is lost, the rule of law, everything is just Mad Max. And that is actually the best case scenario for the U.S. because then they won't vote for maybe everything will just fall apart, and it'll just kind of be like anarchism. That's probably the best case scenario because all the public workers are going to lose their jobs too. They think they're safe. They think, oh, the police and this and that. No, they're all going to lose. The money will... They will get paid. It's just that every day and every week it'll be worth less, and it'll just be pure chaos. Can they somehow do a slow crash course fall? I don't know. I hope not, because as it's slow motion, if it's slow motion, you lose more freedoms or you become more enslaved as it's slow motion fall. So... And, you know, there'll be less freedom of speech. I'll be taken down eventually. And then, you know, they come for everything. What is this? A positive sign for gold is the non-commercial positions are still at very low levels. It means institutions and fund managers have not been major participants in the rally yet. So that is somewhat true. I think all the gold bugs have been buying, and that's why the price has been going up. And I think some smart money. The institutions haven't come in yet because I don't think they can. If they do, the price would just rally to 1,500 like overnight, or 2,000 overnight, and it's gonna happen. It's gonna happen in a week. Like out of nowhere, gold will be like around, I don't know, 1,380, 1,400. All of a sudden, it's at $2,000 like within a week. And that's when the mining stocks are like, you know, going to the moon. 1,000, 2,000, 3,000% gains. And then you can start taking profits, buy physical, whatever you want to do with it, right? That's why I hold. I hold my stocks. I don't trade them. I trade ETFs here and there. But majority of my assets are pretty much in the stocks. And I'm just going to sit there and wait. And people say, oh, well, it's going to do what it did in 2008 where... the mining stocks and gold will drop sub 1,000 and then it will rise. I wouldn't bet on that. It might happen. It could happen. If it does happen, whatever. I don't care. I'll still have some cash and I'll take advantage of the opportunity. I'll sell some cryptos. I don't care. But I wouldn't bet on that because it might not happen. It might just be that they go straight to the moon right off the bat and the dollar just falls. The support falls out from the bottom of the dollar because the Fed has already capitulated. That's why. And also, I think investors are very nervous about the next presidential election. Because if we get if we get Bernie, I mean the dollar is gonna tank. It's because they're just gonna keep printing money and handing out. It's gonna be full blown. Like communism, everything's gonna just fall apart instantly. Just the anticipation of him even winning. All right. So I'm confused about what's going on with the trade deals because the news was just on. There is no deal so far, but they keep talking about it like it's gonna happen. It's gonna happen. You have to understand this is economic warfare between China and the U.S. And it's like they're calling each other's bluff. And I think the Chinese think that the U.S. can't handle if there's no trade deal. And Trump thinks that the Chinese can't handle if there's no... It's playing chicken. They're playing chicken with each other, okay? And we'll see what happens. I think the markets, even if there is a trade deal, I think it's not going to make the market rally all that much. As of right now, I think Trump, what he's trying to do is trying to say that don't worry, there'll be a trade deal in the U.S.'s favor and everything's going to be okay. So the markets keep going higher and it buys more time until the next election. But honestly, I don't think we're going to find out in the next month or 2 months. I mean, they've already milked that cow. So I'll get into the charts and I'll let you guys know. I think the stock market's still not going to go to all-time highs. But at the same time, you see these articles, it's like fake news. China has agreed to buy 1.2 trillion U.S. goods. And that's kind of old news. I mean, they were buying that much anyways. What are they going to buy? Soybeans? So, it's pretty much what's going on right now. Let's get into the charts. So, here's the S&P 500. I put some good indicators on there. Here's learning how to trade. So, this is the daily chart of the S&P 500. We're on an 8 count right now. So, tomorrow's a 9 count, right? So, after a 9 count, it could go to a 13 count, but that's rare. But usually after a 9 count, we get 1 to 4 or more of a pullback. Also, there's a lot of resistance up around 2,800. There's also the 78.6 Fibonacci retracement from the all-time high to the bottom of the correction from the all-time high, right? Also, if we zoom out, I mean, we're still in the... So this Fibonacci you see on the right here, the larger one, that's from the bottom of 2009, from the mortgage-backed security crisis correction. Let me go to a weekly chart so you can see that. So this is a weekly chart from all the way from the bottom of the 2009 bottom, right? I put a fib in there. And it was, everyone's like, oh, you're a noob. You're using a Fibonacci. Yeah, well, it works. I don't care what you think. I mean, you have to keep things simple in trading. The more simple, the less confusing. You're not getting over-analysis paralysis, and it works. At the end of the day, it's just strategy and keeping it simple. Honestly, guys, it's worked fine for me. So it's very profitable. I keep things simple, less mistakes. So, the price corrected all the way to the 200-week moving average, bounced right off of it, which is also around the 23.6 Fibonacci, right? So it was that simple. And we actually blew through this green Ishimoku cloud. Right now, on the weekly, we're on the 6 count. So on the weekly, technically, we could have... about 3 more weeks of upside, or the price could linger around the 78.6 percentile fib and around the 2,800 on the S&P 500. So that's what I'm looking at on the larger time frames. So let's go back to the daily. Let's look at the oscillators real quick. Momentum indicator, I mean, it's high, but it could run hot for a little bit. The TM squeeze, that's interesting. It looks like it's going to break out to the upside. And there is a little bit of purple here, which means a squeeze is coming. So consolidation. And then after consolidation, you either get a breakout or break down. This consolidation looks like we're going to get another breakout. So the TM squeeze is telling me a little more upside to this. Now, I don't really believe in double tops. So I'm thinking if we do get a breakout, we're either going to go past the all-time high, and I know I've been saying we're not, or we're going to go a little bit higher, and not break above 2,900 and then pull back in a major way. and then we'll see what happens. Then we'll see if it's a major correction, or it's we'll get a higher low. So let me draw it. So this is what I'm thinking. And then we pull back. We get a higher low. We revisit the 50% fib. And then we go and we start making all-time highs and whatnot. And I think that'll depend on the trade talks and whatnot. Here's the problem, though. The fundamental economics is sort of deteriorating. I mean, we're at all-time highs, and the car bubble, the housing bubble, there's a lot of cracks and fissures. So even if we did pull back and go to all-time highs past 3,000 on the S&P 500, that's like chasing the last 10%. That's what I believe. And this is my own belief and theory. Can I be wrong? Yeah, but I think if this is what happens, right? This what I just drew here. I think you're chasing the last 10%. Hold on. So you guys can see that. I think then you're chasing the last 10%. So we'll see what happens in the next. Well, we're going to be on a 9 count tomorrow, so we'll get a sell-off. We'll see how deep that sell-off is, a pullback, and then we'll see if we can make a higher low, and then it'll go higher. So let's go back to the daily chart on the S&P 500. So here we go. I mean, we're trying to break above this resistance. Now, we did test it 1, 2, 3. This is the 4th time. And the more you test resistance, the more likely it's going to actually break up higher. So we'll see if that happens, or we'll get another pullback, and we get a higher low, and then if we go back up, right, we'll get a cup and handle, right? Then what happens is we get a sort of a bottoming pattern and a cup and handle after this correction, and then the price will go higher. Now, what does that mean for gold? Now, gold's been going up with the stock market, and that's just because of the fact that the Fed has capitulated. Now, the stock market, yeah, it can keep going higher and higher, just based on the fact that the Fed keeps printing money. Meanwhile, the real underlying economy starts falling apart. So stocks and the financials keep going higher while the real economy on Main Street starts falling apart as the dollar keeps losing value, and at the same time gold keeps going higher. And honestly, that's probably what they want, because that buys the most time, and the masses don't realize that as quickly. People just start thinking that they're doing bad in life, and it's not everyone in the whole economy. It's kind of like a trick, right? So that would buy max time for the economy and for Trump to possibly get reelected. So I don't be surprised if that happens. If the stock market goes to all-time highs and just keeps running higher and higher, meanwhile gold and silver keep running higher and higher, and the dollar starts falling. So let's take a look at the dollar, then I will look at gold. So here's the dollar. So it did have a huge cup and handle, and it did not break out. So now we kind of have a cup, handle. And sometimes those do break out. The dollar is a little difficult right now because you have to consider international problems. The MACD is crossing to the downside right here, right? And the dollar, that means that the dollar should pull back a little bit more still. Although the MACD and the RSI is telling me that the dollar is going to go higher. There's a lot of resistance on the dollar at the 97.7, right? There's a lot of support at like 95.6. So this area is neutral to me. So we'll see which way it breaks out, because I'm not sure. It all depends on what happens internationally. If Europe starts falling apart. That's another reason why the U.S. stock market might actually go higher, because the European Union might fall apart, and China as well, right? So the world, as the world falls apart, the U.S. will be looked at as a safe haven, and it'll buy the U.S. more time, right? And honestly, believe it or not, the Fed could keep printing money, the dollar could keep rising in value, the stock market could keep rising in value, and gold and silver could also keep rising with it all. And that's because the rest of the world could be falling apart. I mean, Europeans will start buying metals as well, and dollars, and U.S. stocks. And so will Asians, and so will, the second world. And so the U.S. might be the last, like I've said previously, it's the last. It's like if you own a dog, it's the nicest looking turd in your yard, okay? But at the end of the day, they're all dog poop, all right? So the U.S. stock market and the dollar is like the crappiest. It's still going to fall apart like the rest, but it's still the best looking to the world. So that is why you may actually see the dollar rise, the stock market rise, and the metals rise along with it, because there's just so much turmoil in the world. All right? So in dollar terms, metals may not rise as much, but in euros and other currencies, so if you're not in the US and you're international, you're somewhere, you live somewhere else, you have to look at metals in your currency as well, because if you get paid in your currency, then you'll be losing value much faster, because I look at the charts in dollars. I'm a US, right? So there you go. Also, it's probably going to be bullish for Bitcoin and cryptocurrencies as well. So I look at metals and cryptos as similar. Well, Bitcoin, not the altcoins, but Bitcoin and gold and silver and gold is very similar. All right, guys, and Litecoin. So that's what I'm thinking. That's the dollar. This is a daily chart of the dollar, by the way. So let's go back. Let's take a look at gold. So gold has had a massive run as expected, because I put this cup and handle before it even finished the handle part. And we did break through that 1300. And right now we are on a 13. This is a daily chart, by the way. We're sort of on a 13 pullback. And that's fine. And we'll see if gold could hold above 1320, and I think it will, because it's going to hit this green Ishimoku cloud and then possibly go higher. And once gold gets past literally like 1,370, 1,380, there's nothing stopping it from going to 2,000. There's like no resistance. And then your mining stocks, they're going to go to the moon. Also, it's positive all these moving averages on the daily chart cross to the upside. It was kind of a golden cross as well. RSI is already starting to become close to oversold. The MACD, it's sort of in nowhere land. Momentum oscillator in nowhere land. So let's take a look at the weekly chart, see what that tells us. So the RSI is a bit overextended on the weekly. Right now we are on a 3 count on the weekly, as you can see right here. Although this candle right here, I don't like that. It kind of looks like a shooting star. So when you see a candle like this, hold on. So basically, we want to see this week close above. We want to see it close above 1,350. Or close around it. Because we don't want to end this week looking like this candle. So these are weekly candles. If this week's candle ends like this, then it's an inverse hammer, right? So then I would expect this 3 to possibly fail, or the week after to possibly revisit 1300 support now. But I don't know. We'll see how this. Today is Friday. Oh, that sucks. All right, so I don't like how this candle's ending. So we'll see next week on the opening candle if we could trade higher. Because this is an inverse hammer. So you have to watch out for that. Although I've got a green cloud starting here on my Ishimoku, which is very positive. And gold might just ignore that and just keep going higher. Still, not just that. Look at this. This 1 count is a hammer after a 9 sell signal. And so is the 2 count, which is trading above the 1. So this formation right here, technically this 1 should be a green candle. It's 3 candles trading above each other, and it's a 3 count. So it might override this candle, right? Also, let's take a look how this looks. I mean, this looks great. Look at this. Even if it pulls back on gold, we would get a handle. Right? So if we do get a pullback, you know, we might get a handle, and that's fine. So cup and handle on the weekly, right? And then boom, shoots out. So I'm not worried. If gold pulls back, I just view it as a buying opportunity. Also, you have these moving averages that are going to cross, and we're going to get another golden cross in the coming weeks and next month or two. So either way, I'm not scared of gold falling. I'm just going to keep buying as it pulls back. I think 1300 is very strong support at this level, at this point. All right. So, also, yeah, like I said, guys, I mean, 1350, anywhere between 1350 and like 1380, once it gets past, once it gets past this area, it's a multi-year bull market in metals. And you do not want to miss that. That's life-changing. And, you know, if you're holding physical, it's going to take years for it to get to, like, I don't know, 5,000, 4,000, 10,000, wherever it's going. And that'll just be a couple 100% return on investment. But you might want to take some of your capital and put it in some miners, because those are going to go up hundreds and thousands of percent, right? If we go into a multi-year bull market, and that's what I'm hoping for. Let's take a look at the oscillators on this weekly. One second. Now on the weekly, yeah, the RSI, the MACD. The oscillators are a little bit overextended, so it would make sense for the price to pull back to 1300. And as long as 1300 holds up the price for the next few weeks or months, I'm happy. I don't care. I see that as a great buying opportunity, and then it's probably going to move higher in a very big way. And yeah, I mean, that's what I'm looking at. The price could still go a little higher until 1,370, 80, and then pull back. We'll see starting next week. I'll keep you guys updated, right? Because we do have a beginning cloud of green cloud coming up. So the price can go to like 1,380, and you're going to see these mining stocks take off like crazy. And then we might see a pullback for a few weeks or months during the, you know, like the summer, well, spring or summer doldrums in July, which makes sense. And then next fall, it's going to rip. And we start going into a bull market going into 2020. especially with the elections ramping up, making people very nervous, right? About U.S. going full-blown commie, right? So these are my thoughts, opinions for now. And yeah, oh, here's the dynamic yield curve, guys. Another huge indicator. It's been correct for the last 7 years. I've shown you guys this, but there's a lot of new people, so I want to show you this. So we had the NASDAQ.com bubble burst in 2002. We had the mortgage-backed security crisis in 2009, and right now we're in 2019, right? This blue line on the right here represents the stock market. It actually represents the S&P 500. This red line on the left here represents the interest rates on government debt, on bonds, right? Which U.S. citizens hold, and so do retirements and retirement funds and foreign investors, right? And it's what pretty much gives value to the dollar and controls the interest rates of credit cards, mortgages, auto loans, and whatnot, right? And the free market moves this, and then the Federal Reserve artificially tries to manipulate this. That's why we don't have free markets, and we never had free markets, not in our lifetimes. Not since before, what, 1913? All right, so here's, let's do this again. Here's, what year is this? 1999. So watch the yield curve. So the beginning of the yield right here on the left, this is your short-term bonds and treasuries. All the way to the right is your long-term 30-year. So at the very beginning is the 3-month treasury. On the 30, and then all the way to the right is your 30-year. And everything between is your 20-year, your 10-year, your 5-year, and blah, blah, blah. And watch as I bring this across the S&P 500 stock market. So here we go. 1999, 2000, and then here's the NASDAQ bubble. Now you notice how the short-term yield, the interest rate on the short-term bonds, is higher than the long-term bonds. Well, the interest rate on long-term bonds is supposed to be higher than the short-term bonds because you're holding the debt longer. So the longer you hold someone else's debt, the more interest you should be getting paid, if that makes sense. All right. All right, so here we go. The NASDAQ bubble crashes, and then the yield curve, as you can see, well, here it goes. It inverted right before it crashes, hardcore inversion. And then it normalized as the stock market crashed, the NASDAQ bubble, and the S&P kind of took a big hit. And this is normalized rates. This is what it's supposed to look like. And this is what it looks like after the stock market crashes, because everything normalizes. And that's how the stock market, the free market, fights against the Fed and all the manipulation. And that's why we have crashes, because the market needs to wash out the malinvestment and all the money printing and all the debt and all the stupidity and the greed and the manipulation by central banks and governments. All right, let's continue. All right, where are we? We're in 2002, 2003, 2004, 2005, 2006, 2007. It's inverted. It's inverted. 2008. And boom, we get the crash, and it starts normalizing again. All right, now we're in 2009, 2010, 2011, 2012, 2013, 2014, 2015, 16, 17, 18, 19, and 20. And we're flattening out, and pretty soon this is going to invert. Well, the Fed's trying to keep it artificially low, but once this dips low, the 30-year and the 20-year and the 10-year start really going low, then, I mean, that signals that we're about to have another stock market crash. Here's another graph. As you can see, as the yield comes down to this red line, we get this... you can see in the background here, there's that shadowed area. Well, that's when the yield curve inverted and we had a stock market crash soon after. So the blue line is the 10-year and the 1-year spread on the treasuries. All right, guys. As you can see, here we go. 2000, right? NASDAQ bubble burst. Well, what happened? It came all the way down to the red line, and then the stock market burst. Here's 2009, right? What happened? The blue line came down to the red line. Well, here we are. We're getting real close to the red line. So we don't have much time left. I mean, it could be months, it could be weeks, it could be another year, but I'm telling you, we don't have too much time left. All right, guys, so if you found this informative, thumbs up, smash that like, subscribe to my channel, and please share it. It's probably the only way my channel could grow. If my channel stops growing, I'll probably stop doing this. All right, guys, I appreciate it. Check out all the links below. Also, in the links below, go to MMGinvest.com, and that is where I've done research on mining stocks, silver and gold. And you can use that research, and you can research it yourself, and it might help you out, right, with this next market cycle coming, this next bear market cycle. And you can take advantage of that. Also, there's free trading academy, which I'll be updating, and soon I will launch the MMGinvest Elite members group where we just share information. And for everyone who's already purchased, it comes free for the first month, and then it'll be like $10 after that. Because, you know, this does take a lot of my time, and time is money. Alright, guys, until next time.